All right, so we are going to go through my workflow that I do on a daily basis. First place I want to start is just going over what everything is on the screen. We have the VIX chart on a 30-minute, right? We have the sector rotation. So we have the strat, full time frame continuity. We have SPY, IWM, and QQQ. Those are the indexes. And then we have the SPY sectors. What else do we have? Let's delete this. All right, so right away we can see that XLY is in pink. It's like light reddish color, which means it's the highest moving sector. And then XOP is the lowest moving sector, and it's in blue. So we know that XLY lit for the day, so we're going to look for XLY plays. So scroll up, and we see all of the sectors for today. You can see it's Tuesday, May 31st. So at the top, you can see XLY definitely did lead today with 0.51%. At the bottom, you can see XME was at negative 3.5%. So that was the lagger. Since XLY is the leader, we're going to go into the Xly Holdings. So we can close this and then basically just go to personal. These are our own private watch lists. Then I'll go down to XLY. And I'll open it up. So we can see that Amazon and Nike were the top two movers. Lowe's and Target were the bottom two laggers. Amazon is a bit expensive for me, so I prefer Nike. So we'll go through the Nike contract or the Nike process and see how we can get into that position. So basically, we can just close this for now, and we'll pull up Nike. So NKE. So right away, we see we have our monthly chart, our weekly chart, the daily chart, and the 1 hour chart. Let's just make it a little easier to see. All right, so we can see immediately that we're down on a month. We're up on a week. We're up on a day because it's green. And we're down on a 1 hour. So basically, we'll just go ahead and do our supply and demand zones, and then we'll get into the contract. So let me do that real quick. Alright, so we finished working up our charts. You can see we got some monthly demand and supply zones, weekly demand zone, the daily and hourly demand zones. Also got a couple of gaps that we identified. So if we try to zoom out a bit, if we only look at what's happening right now from the beginning of the year, we can see that Nike has been in a bit of a downtrend, right? A bit of consolidation here, and then price fell. So right now we're in a demand zone. You can see the last time price was at 120, it went to 134. We also acknowledge that there's a gap here. And here's the beginning of that gap. The beginning of that gap is here. So if you see the candle here, you know if we get some strong momentum, we can get back into that gap space, right? So, all right, so we could see, prices at 120, it went to 135, played in this zone a little bit, and then it fell back down into a demand zone. You can see there's a zone from 105 to 116, and we did the same action again, right? So now basically we can see that we can make a nice move in Nike, right? If we look at the hourly chart, we can see that this candle is red. So I'm just going to zoom in. So this could be our entry on a 1 hour. If we get a candle, our next candle is green, and it makes a strong move out the demand zone, we could possibly see 135. And it probably won't happen immediately. So we'll think about getting a monthly contract, because now it's May 31st, and we'll get a June monthly contract. So I will, let's see. If we look at the weekly chart, we want to identify some price targets, right? So here's some price targets. Here's a price target, and we'll just change the color of this line. We'll make it green, and we'll say weekly price target, because it's the top of this previous week's candle. Then we have 129, 128.94. This is also a weekly price target. And then we have this next one. You see the monthly demand zone where it starts. That's also a price target. So we'll just edit that price level. We'll put 2 slashes, put week price target, and then we'll change the color to green. And then on the daily chart, let's see if we have any other closer price targets. So we have 124. This could be a price target. So we'll put daily price target. So that's pretty solid. This daily gap, this could also be a price target as well. So we'll just edit that and for the daily gap. And we'll do daily price target. We'll make it green so it stands out. Alright, cool. So if we zoom in a little bit, we can see we have quite a few price targets, right? Our entry is going to be based on an hourly chart because this candle is red. Right now we also can see that we don't have complete full time frame continuity. Tomorrow starts a new candle in the monthly chart. And so something that we want to make note of is this. At 126.2, once we pass this level and the candle is going up, this will put the M, it'll put it in a green status. This is also a 2 down, 2 down, 2 up bull if we think about the strat. So let's mark this level and we'll say 2-2 bull month. So we know once we get to 126.2, which we're not that far away. Right now it's 118.85. But once we get to this level, we'll have full time frame continuity, meaning that this will work in our favor. So it'll be green, 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 green. And that'll be supportive of the move we want to make happen, or the move we want to see happen. So we can say our entry is going to be once we come out of the demand zone, right? So 120.42 will be our entry, right? We see that we have our entry identified. We have 1, 2, 3, 4, 5 potential price targets. If we enter at 120 and price can go to 140, that'd be a pretty substantial move over, the next couple of weeks. If we look at the calendar, let's see. All right, so June 3rd Friday is June 17th. This is our monthly contract. Is it going to take us 3 weeks to make this move happen? How do we know, right? So what we do is we look at the last weekly candles. So if you look here, if you hover over the weekly candle, you can see at the top here, I can't move the mouse, so just follow along. It says at the top, it says D5922. It says O 112.97, which is open. We have the H, which means the high of the candle, 114.43. You have the L, which is the low of the candle, that's 105. You have C, which is the close of the candle, which is 113. That entire range is 9.43, meaning this candle for the week of May 9th moved the range of 9.43. This next candle has a range of 12.03. This next candle has a range of 12.55. And this current candle has already moved 5 points and it's only been Tuesday. So we have a couple more days this week. So you can see this candle might be pretty bullish. It's only 1 day of price action and it's already 5 points. That's already half of the move. See, 12.55 divided by 2 is about 6.22 and some change. So we've already moved half of the previous week's range and it's only been 1 day. So we know that it's like 10, 12, 12. That's 34 points in 3 weeks, right? Look at this candle. That was a 15-point week. This candle was an 8.46 candle week. So we know it's possible that within 3 weeks, we could move 20 points. So looking at the daily chart again, our entries are 120, and we could possibly move 20 points over the course of 3 weeks. Now, of course, it could take longer, but that's a pretty nice move. So let's look at the contracts now. That's a pretty nice move. 120, 124, 126, 128, 134. And basically, we want our candle. So we already entered this one demand zone. So we want to take out this candle next. We want to take out this candle. We want to take out this candle. Then we want to attack this candle. And then this candle. So we're basically at war. We want to take out all of those bearish candles. So next we go to trade. And we have all of these options. So you can see the weeklies will say weekly beside it. And then the monthly won't say anything. That's how you know it's the monthly. We have June 17th. Then you have July, September, October, January 2023, June 2023, January 2024. If you buy any of these, October, January 2020, these are considered leap contracts. So right now we know we want to look in a price range of 120, like 121 to about 135. We want to see what those contracts look like. So we go back to trade. First, let's look at the June 17th one. On the left side, this is for calls, meaning price is going to go up. On the right is puts, meaning price will go down. So on the left here, you have two columns that are important. You have the volume of the contract and the open interest. You can see the labels up top here. Then you have the bid price and the ask price. So you basically will buy the ask and then sell the bid. We want to find a contract that has a lot of volume and a lot of open interest. So we can see that volume wise, 125 looks good. And then next would be 130 at 3. Oh wait, yeah, 120 is kind of expensive. I wouldn't fool with that one. And then open interest wise, we can see that 125 looks good. I would even say 135 looks good as well. Right? So let's do 130. So what we'll do is we see that this is $47. If we want to look at a further contract, we'll look at a July monthly. So that 130 call will be, see, it's $258. So you will be buying more time, and so it's going to cost you more money. This is about a $20 spread, meaning that you buy at $258, and if you wanted to sell that immediately, you could only sell it $234. It's not too bad. You lose $20, so that's pretty cool. The open interest is pretty cool. The volume is kind of low for July. I wouldn't get that far because the market is just kind of weird right now. So I would just only focus on June. Let's close that. So now we understand 130 is our strike price, meaning that we break even at 130.47. So let's see, what's a good way to do this? Let's say 130 plus 0.47. So at 130.47, that's our break-even price. Let's see. So you right click and you go to analyze, go to buy trade, and you go to single. Then you click on risk profile. So if we go back to the chart, we'll see that if 130.47 is our break even price, let's mark like right here, and then we'll put break even price, and it's 47, so you can change it. Boom. Let's change the color too. I'm gonna make it pink so it can stand up. Boom, we know our break even price. So now this is where it gets fun. We go to analyze, and if we get in at 120.42, our stop will be at the bottom of the demand zone. So this will be our stop here. Let's say there, 118.04. This will be our stop. Recording, great. So we get in at 120.42. Our stop is 118, and we're looking to make a 14. No, it wasn't 14. Oh, here it is, 139. We're looking to make a $20 move, so our risk reward works pretty well. Right there, you have you're risking $2 to make $20, which is basically a 10 risk to reward. So it's pretty solid. That's the ratio. Yeah, so now we go to analyze, and basically this allows us to see what how much money we could possibly make on this contract. The most important part of this section is to make sure that the option premium that we selected is at the bottom, so we know we have one contract on the buy side, Nike. Expiration is June 17th. The strike is 130, and the cost is 0.47. Right? Now in this section, these numbers come pre-populated, but we're going to change all this information. So we're going to put in our stop, our entry, our break even, and then we're going to add at least 5 price targets. Right? So we go back to the chart. And this is where 2 monitors come in for this process. It makes it a little bit easier, so you don't have to flip back and forth between screens. So our stop is 118.04. So we'll type that in here, 118.04. Our entry is 120.42. And we have our break even is at 130.47. So we'll type in 130.47. Now if we want to add in more price slices, this is how we do it. We click on the plus sign, and then it just adds to the bottom. So we'll just add in a couple prices. I want to see how much we make in between these 2 levels, our entry and our break-even price. So I'm going to add in 2 price levels there. Let's see what we got. I'm going to add in 124.75. So let's see, 124.75. I'm going to hit the plus button. I'm going to add in 126.2. So 126.2, this is a crucial level because once we get to this level, we'll be green on the monthly. which works in our favor, especially if we're bullish on this position, which will give us more momentum, right? The next level is 128.94. So I'll add in 128.94. Now we're going to add in a couple of targets above the break even at 130.47. So now we'll add in 134.82. So this will be 134.82, and then the last target is 139.36. So let's add that in. Add the plus button. I think that was 139. Is it 76? Let's double check. I don't remember. 139.36. All right. So let's hit 3. Boom. Now we want to click on the 3-line menu and click on reorder slices by price. So now you have the lowest price to the highest price. So we can see, you know, if we got into that trade today, well, before I get into that, we have this graph up here. I didn't talk about this yet. Basically, the dotted lines show the price slices that we have mentioned here. You can see as we go over, this pink line is on like a nice slope going over. It's pretty solid. This is our break-even point. Once we hit break-even, look at how price jumps up to 134. Wow, that's pretty amazing. And then when we get to 139, look at how price jumps. So we at 130. This is our break even because 130 is our strike and it costs $47. That's our break even. That's why this line is red right here, because it's break even. This line is red here because price is currently at 118, and that's where the price currently is, right? So price kind of goes up gradually. This number 214.77, this is our profit amount. And so by the time we get to break even, we're at 336. We hit the next price target, we're at 600. So we almost doubled our money, right? Hit that next price target, we're at 966. So that's pretty solid. Let's see. The delta, the gamma, and the theta, the vega, these are all option Greeks, and they tell us different information about the option contract. And then here is our profit column right here. PL open, PL day, right? Now we can see visually on our entry, we could have made 11.97. If we allow this to go down to 118, we'll only lose $15. So that's not bad. Our next price target will be 102.98, 148, 260, 336 is our break-even point. 608 is next price target. 964 is next price target. Right? Now check this out. Can I make this bigger? Oh, sweet. All right, so now this is where it gets fun. You can increase the contracts. So it's $47. Suppose we invest $500 into this. So basically 500 divided by 47. That's 10.6 contracts. Cool. So we'll do just 10. If you wanted to do a little extra, get that 11th one in there. And then basically you see how price increases. So we've invested a little over $500. And if we hit the ultimate goal, we can turn $500 into $10,000 over 3 weeks. If we don't reach this top price target, we still possibly could get a break even, right? And still make $3,700 on this one position. And so basically you have 3,700 minus 470, that's 3,230. That's your profit. Yeah, that's pretty solid. It's not quite 470, it's a little bit over. So 517, 37 and 1. So $3,100 would be your profit. Yeah, so that's pretty cool. This is a good way to understand how much money you can make over the long run. This is for a swing trade. And so basically, you can look at this to see what you can make. If you want to go ahead and add in another contract to see what that could look like, you go back to trade. And instead of getting maybe like the June contract, maybe we decide to get June 24th. So June 24th, the one, say we get a 128 position. So we just analyze, go to buy trade, go to single, and see now you have both. You have June 17th and June 24th. So now this is $97. Say you get 5 of those as well. So now you have a total of 16 contracts. 11 expire on the 17th, and then 5 expire on the 24th. You are invested a total of $1,000 plus a little bit extra. You can see how these numbers, if it's a total of $1,000, you could lose 300. At break even, you can make 58.58. This break even point, 128.97. This will put you at $4,500. So I mean, this is a pretty cool tool to understand what's possible, and you just sit back and watch your trade, and just see what happens. I would say a good way to manage your trade would be first to make sure it's working. Check the hourly chart, and then after you see that that's working pretty well with no reversals that are too crazy, I will move to the 4-hour chart, right? And then once we feel comfortable with that, we will look at our daily chart. And what we do here is that we move our stop up to be the bottom of whatever the next candle is. So say the next candle starts and is pretty strong, we move the stop to the bottom of that candle, which should be somewhere around 120.42. And then, another candle forms, we move our stop to the bottom of that candle, and you keep inching it up until you get stopped out of the trade. And that's how we prepare for a swing trade. Now you go back to trade, and I have a watch list just for premiums. So let's close out of this. So basically, I go to right click, I go to copy, and then paste it. So now we have the Nike contract. It's already increased by 180%. Then you have your June 17th contract for 130 strike. Copy, and then you add it over here. Right. We basically, we set an alert for our entry. So we click on create alert. We say 120.42, and we say a 130 call. And then we also say a 128 call for 0624. Everything is good. I have some custom sounds, so that's what that sounds like. Boom, click on create, and now we have our alert set. So when that alert goes off, we're gonna look at the chart, and then we're gonna press go on this. Now, before I get into this, we can see that the 130 call has grown 115%, and the 120 has grown 180%. So now let's change the same symbol length to 6, and then let's click on the June 17th position. So it populates, and let's just close it. So let's see what's going on here. All right, we got a couple targets to take out on a monthly basis. So this first target will be 457. Let's look at the week. I hate these lines. This blue line is open interest. That shows you like the volume that's in the market for this at the current moment. And then this purple line is theoretical price. So it tells you like hypothetically what the price should be. And you can see this is pretty on point with where the price is at. It follows that price action pretty closely. You can see here that price is starting to get a little stable. It's basically found a bottom. So red, red, green, green, right? We zoom in some. So this price is basically the high is 0.05, right? So if we draw some price targets, if we can get in around, is that 0.5 now? I would like to get in no more than that 0.75. That would be the most. But 0.5 is ideal. So our next target on the weekly is 109. Then we have this huge target here, 457. Then we have this one at 535. So basically, what does this mean? This means that it could be 535 minus 0.5. That's $485 per contract. Say you have 10 contracts, that's $48.50, right? So just looking at these price targets. Of course, there's some other ones. This is just to give you an idea of where price could go on the option premium chart. This is after hours, so I want to turn this off. Let's go to options, uncheck, apply. All right, much better, much better. So basically, price is gone in a wave. See, it was here, it came down, and then went up pretty close. So we have a high right here, and then it comes down, and then we revisit that high pretty closely. It's 11 right here, That's 12.7, 12.9. This is 11.3. So, we're here. We could possibly make a strong move back up, and it could possibly go further. Something else to note is look at these big volume sticks. It's a lot of volume. Something else to consider is summertime right around the corner. Nike has a lot of athleisure for athletes, for casual, a lot of shoes. They just started working on NFTs, and people tend to go shopping a lot in the summertime, so this stock could do pretty well. Something else to also understand is that we have a earnings call coming up on June 27th. So with that information, let's also get one more premium for July 8th. Let's just get two of these at 140. So we just go to analyze, go to buy trade, go to single, and then basically what we do here. So now you have the 130 call for June 17th, the 128 call for June 24th, the 140 call for July 8th. Now we get two of these, and let's just only look at that one. So we uncheck these two. Now if we only spend $150 on this contract, we could risk losing $50, but we can make as much as $1,000 or $1,100 if we hit 139. This also gives us time to get the earnings call, because that could be a pretty bullish move as well. So by having more time, we can also account for that earnings call. So that's pretty cool. Something to note. Then the other thing we want to do is let's go to Nike website. Alright, okay. Oh yeah, we want to see what's going on. Anything hot? What happened? Alright, so we have the high top Air Forces with this cool thing happening with the check mark. I like that. These might sell up pretty well. Could go with a lot of fits in the summertime. We got the tie-dye long sleeve tee. We got the matching sets with the sweatshirt and the shorts. Cargo pocket, that's pretty fly with the Air Maxes on. Okay. You got the breathable running shoes, under $100. These could go pretty fast. Running shoes can be pretty pricey, so the fact that these are under $100, that could be pretty good for the bottom line. Oh wow, we got the double check. It's kind of give us the vibes from the Off-White collaborations, so this could be pretty good. I like both of these. See the bubblegum, not bubblegum, but like this see-through kind of sole. Let's see what else we got. Oh, these are fire. Okay, so I like what Nike's doing. Okay, the low tops, sweet. The bucket hats, these are fire. That's gonna go pretty fast. Alright, so now we see a couple things happening for Nike. Then we come down to this one section where we see investors. So click on investors. And we're just checking to see any news about the company that may be useful to guide our decision. Another thing to note is that Nike just opened up a headquarters in Atlanta, I think. Let's see. It should be on this news page. So we got news, events, and reports. Sustainability and retail is huge right now. especially with this partnership between Gap and Yeezy. Their whole mission statement is sustainability. All right, so click on news, see what that is. All right. So investor news, let's see what's going on. So we have a new quarterly dividend at 0.305. Okay, it didn't increase. It's the same as before. Let's go to previous news from 2021. All right, so in November, it was 11% increase in the dividend. Pretty cool. Yeah, before it was 0.275 per share. Okay. Let's see what else. All right, so I don't get into all of these all the time. These reports are pretty dope though, so check this out. Let's look at this really quickly. And Wi-Fi is going slow. So this is 4 pages, not bad. We could download it, read it later. Let's just see what they're talking about. I'm looking for the numbers. So extraordinary results in FY 2021, awesome. In a time of unprecedented macroeconomic volatility, we grow our leadership position, extending that separation between us and the rest of the pack. I like that. I like that a lot. Anything else? I'm just going to browse through really quickly. So they live stream to the sneakers app. Pretty cool. It means they're spending money on R&D. They're making their company better. They launched Sneakers Live. So they're doing product drops, live streaming that. That's pretty nice. Digital revenue is over 20% of the business. Here we go. This is important. Revenue performance. So 2021, we did amazing, right? That's pretty good. This is millions too. Look at the earnings per share. Things, everybody took a hit in 2020, but they didn't do too bad. They still did better than 2018, so that was pretty phenomenal. A lot of companies lost money here. And then look at the growth that happened in 2021. That's amazing. The return on capital. So basically, we invest money. That's how much money they made off of us in a percentage. So you invested $1,000, they made 48% on that money. You invested $100,000, they made 48% on that money. That's pretty solid. And then look, the S&P 500 or SPY performed at 121% over the last 5 years, and Nike outperformed SPY. That's pretty amazing, right? And then this one site, let's go to Market Beat. This will tell us what happened on the earnings reports. So we type in Nike. So we're just gonna sign with it. You gotta sign in. Yep. There's no way around that. Sheesh. Pop-ups. Alright, so type in Nike. Click on it. And this site is free. You just have to log in. So you scroll down, you go to earnings, click on that, and then we want to see what happened over the last couple of quarters. So we scroll down. We want to look for earnings history by quarter. This is the chart you want to look at. Let's close that. Lord. So basically the column we want to look at is this beat miss column and a revenue estimate. I'm sorry, actual revenue, that one here. So basically we can see 2022, 2021, we've been beating our earnings reports. Look at the EPS. Not bad. It's staying pretty average. Had a slight jump. And, you know, we're still maintaining the same range. Not too bad. Prior to the pandemic. So we had a miss June 25th, 2020. And then we had a miss June 27th, 2019. So let's look at all of the June ones. So June looks like it's pretty cool. June. We missed in June 2012. So it looks like we do pretty well in June. Not too bad. You can see in September, that's where a lot of companies tend to do better in September because it includes the summer months. So it reports the previous quarter. But June isn't too bad. So based on this information, looks like, you know, Nike might do pretty well on the earnings report. Also, you can see the actual revenue and the estimate. So we didn't beat here. We're down. Beat, didn't beat. June 25th. That makes sense. That was March lows right after that. Beat. Yeah, so this is the whole workflow. Basically, you find your chart based on what sector is doing well. XLY is doing well. Then we look at XLY. We see Nike is doing pretty well in XLY. So we look at Nike. We chart the monthly, the weekly, the daily, and the 4-hour charts, or 1 hour, doesn't matter. After we do our supply and demand zones, we look for gaps. So we got a couple gaps here. And then we look at what we can possibly enter into the trade. We mark our stop. We mark potential price targets. We look to see where we can have full time frame continuity. So we know once this M is green for month, we'll have a lot of momentum in this particular stock. So that's pretty cool. And we go and look for our contracts based on first the monthly, and then we looked at a couple additional options. We noticed that there was an earnings call coming up, so we also consider some different contracts that are beyond the earnings call. We look for strike prices that make sense. We know that the price can go from 120 to possibly 140. So that middle point at 130 is a pretty good strike. We go to trade. We right click on this. We go to analyze, go to buy, trade, and go to single. Let's delete that, but we basically enter in our stop, our entry, our break even, and then we enter in some prices before the break even, some prices beyond the break even point, and then we increase our contracts based on how much we want to invest into this position. See, we have a couple different contracts to look at. You can look at everything and check everything, and you can see how price goes up if you buy all of these contracts, or you can deselect some things and look at them one by one to see what could be most profitable. So you can get 11 of these contracts and you could possibly get $10,000 out the market. Or you could check out these contracts for June 24th. You just change the date. You always want to get the Saturday afterwards. So now it's the 25th. And now you see that if you bought 5 of these contracts, you can make $5,000. So that's pretty solid. For July 8th, you could get, let's say you get 10 of these, you feel confident, so you spend $750. You change the date to July 9th, and you see that you can invest $750 and you could make up to $5,000 in it. So pretty cool. From here, we go and look at the company's website. We check out new products to see if we like them ourselves. Here's the actual site. Okay. So this is the actual site here. So we check out. Alright, it's not working. So we check out the site, check out the products. Then we check out the investors page, any news that we should know about. Oh, one thing, I follow Nike a lot, so I know about this one thing happening in Atlanta. So Nike opens. Yeah, here we go. Happened in December. 12,000 square foot factory in Atlantic Station. That's going to make a lot of money. The first of its kind in Atlanta. Yep. That's pretty legit. So, and then the last thing is we look at the earnings report at marketbeat.com. So that's the whole process. I hope you guys are able to digest that. It's a lot of steps, but welcome to my workflow for swing positions. Alright, so real quick, I forgot about this gap. If we do really well on our earnings report, which is going to be on June 27th, and we're able to fill this gap up to 150, we're going to add in 2 new price targets, 145 and 150. So let's go to analyze, and let's click on the plus. Let's type in 145, even number. And then the last one is 150. At this point, we'll be in full time frame continuity for the month, the week, and the day, right? So that's pretty juicy. All right, let's reorder prices. And then also, let's look at the quarterly chart. Let's see what that's given. All right, so the quarter goes green at 139. So that will be quarter, month, week, day. So quarter, and then it'll be month, week, day. That'll all be green. If that happens, we can definitely see 150. So we have to see what happens at 139 first, and then from that point, it'll also be entering a demand zone, and we could possibly hit 150, maybe even 155. this could be a pretty cool play if things work out well. So let's add one more price target of 155. Let's reorder. Right. So say we get this July 8th, we get 10 contracts. Once this thing gets to 150 and we fill the gap, look at that number, 12,226. At 150 or 145, those 10 contracts here, because it's the only one that's checked. 10 contracts of the July 8th 140 call will have accumulated to $8,700. So you spent $750 and now you're at $8,800. At 150, you're at 12,000. At 155, you're at 16,000. That's pretty amazing. That's pretty amazing. This is a pretty good contract to buy right here. See how things happen. You got a lot of time on that contract. That's pretty solid. If you want to remove anything, you got these X's. So we're going to remove this bottom one because it's on here twice. 130, 130, see that? So we're going to delete by clicking on the X. Boom. But yeah, I wanted to show you, if we fill this gap, look at how price goes. Like quickly, we got 2,000, 3,000, 5,000, 8,000, 12, and then 16K. That's crazy. That's a pretty awesome play for it to be about, what is that? 6 weeks, 5, 6 weeks. It's not bad.